Today we're diving deep into the wild ride of Supermicro Computer Incorporated. Last week, SMCI's stock took a nosedive, around 15 to 20% in a single day, after it dropped some ugly preliminary Q3 numbers. But hold on. This isn't the end of the story, it's just a twist in the plot. The Q3 shocker: what happened last week? Okay, imagine you're watching your favorite tech stock climb steadily. SMCI is up massively year-to-date. Suddenly, on April 29th to 30th, SMCI surprises investors by saying its fiscal Q3 sales are way lower than expected. The official news, a Business Wire press release, said expected Q3 revenue is just $4.5 to $4.6 billion, down from prior guidance of $5 to $6.0 billion. That's like thinking you were going to make $6, but suddenly you're told maybe only $4.50, a big hit. Not only that, earnings guidance plunged. GAAP EPS guidance fell from $0.36, $0.53 to just 16 to 17 cents. All in all, this bombshell triggered a panic. The stock tumbled about 15% after hours, and around 20% the next day. Why the carnage? Because investors hate uncertainty and misses. It's like cheering for a home run and getting a pop fly instead. But before we panic sell, let's dig into why this happened. There's more to the story than meets the eye. SMCI blamed two big culprits: customer delays and stale inventory. In plain English, some big customers hit the brakes on their orders, and Supermicro got stuck with extra, last-gen, servers it had to discount. These two factors squashed Q3 results, but they might also set the stage for a monster Q4 rebound. Customer delays: when buyers hit the snooze button. First culprit: delayed customer platform decisions. What does that mean? Basically, some major clients, imagine giant data centers or cloud companies, decided not to buy in Q3 as planned. They pushed their buying decisions into the next quarter, Q4. Why? Could be any number of reasons. Maybe they were waiting for newer chip versions, like Nvidia's latest GPUs, maybe budgets got shuffled, or maybe a board meeting didn't approve yet. The key is timing. Think of it like a pizza party. You order 100 pizzas for Tuesday, but on Tuesday morning half the group says, let's push it to next week. Your pizzeria, Supermicro, had already baked them. So instead of selling those pizzas, servers, in Q3, the sale slips to Q4. The ovens were hot, but the party got delayed. In the numbers, this looked like a sudden drop in sales for the quarter. Supermicro's statement bluntly said, during Q3 some delayed customer platform decisions moved sales into Q4. In investor speak, strong customers are still there, they plan to buy later, but that revenue just didn't get recorded in Q3. It's a timing issue, not a loss of customers, although the result looks just as bad in the short term. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. In more colorful terms, it's like expecting to hit a drive on every tennis ball, but suddenly some balls go out of play, into the next quarter's court. The sales pipeline's there, but the scoreboard, in Q3, got unlucky. So Q3 revenue cratered, and analysts freaked. Inventory hangover, old gear clogging the shelves. Second culprit: higher inventory reserves from older generation products. Yikes, that's a mouthful. Translation: Supermicro had a pile of old generation servers sitting in warehouses. To clear space for new, shiny models, they had to mark down or write off some of that old inventory. Those markdowns eat into profit margins. Imagine a toy store that ordered too many of last year's hottest toy. Then this year a new version comes out. The store must discount the old ones or write them off. Profit takes a hit, even though sales dollars might look okay. For Supermicro, it meant gross margins, profits per server, fell about 2.2 percentage points from Q2 to Q3, mainly because of these inventory punchdowns and extra costs for rushing new products out, expedite costs. In plain talk, SMCI's profit margin got squished because they're cutting deals on old gear and even paying extra fees to speed up shipping for new gear. Both actions help long-term sales but hurt this quarter's bottom line. Think of Supermicro as an electronics store. You've got rows of old TVs on sale, last season model, and you're running a clearance event to clear them out. Yes, you're clearing shelves for new stock, but your revenue from TVs this quarter won't be as high and your profit on each TV sale is lower because of the big discounts. That's exactly what Supermicro hinted at in their update. So, to recap the bad news, SMCI missed big in Q3 because, 1. Customers delayed orders into next quarter, and, 2. Old inventory cost them profits. Those two factors tanked the quarter. The stock market responded like a hungry crowd, stampede to the exits, down about 15 to 20%. The stock reaction, panic or opportunity? SMCI's share price reaction was violent but understandable. As the register reported, shares slumped 15% in after-hours trading after the miss was disclosed. Basically, for the day the stock was around $33, a far cry from its possible summer highs. It's easy to say, sell, when everyone else is panicking. But let's not throw the baby out with the bathwater. We have to remember, this was a preliminary update, not final audited results. The company stressed these numbers are preliminary and could be revised. But even as interim numbers, they're a serious warning sign. Imagine SMCI as that overexcited roller coaster at a carnival. Last quarter it was shooting up fast, thanks to the AI boom, but this quarter it hit a dip, and investors are screaming. However, and this is a big however, the tracks ahead might curve right back up. Let's check out why. Why SMCI could still be a hidden gem. Now let's flip the narrative. Despite the scary quarter, there are big reasons to believe SMCI's story isn't over. In fact, it could be just starting. AI and high-performance computing, HPC, boom. SMCI is not a generic PC maker, it's a specialty server and AI infrastructure company. It builds the very machines that power AI models and data centers. The AI market is still on fire. As big tech companies, cloud providers, and governments invest in AI, they need more servers, more GPUs, more everything. SMCI is in a great spot to ride this wave. Robust product line and design wins. In the same release, management boasted, new generation product design wins are robust. In human terms, SMCI is still possibly winning big contracts for next-gen hardware. They're just late counting this quarter's revenue. Think of it as signing deals that will pay off soon. Enormous growth potential. Look at SMCI's growth trajectory. Revenue jumped 110% in FY 2024, year ended June 2024. That's not a typo, the company more than doubled sales in the last year. And they expect more eye-popping growth ahead. After Q2, SMCI even cut its guidance to $23.5 to $25 billion in fiscal 2025, ending June 2025, still well above last year's $12 billion. Even more jaw-dropping, they're aiming for $40 billion in FY 2026. That's crazy growth, if they pull it off. To put $40 billion in perspective, in FY 2021, pre-AI explosion, SMCI did about $4.4 billion. Hitting $40 billion in a few years would be possibly a nearly 10x increase. It's like a caterpillar turning into a mega-dragon. Obviously, there's execution risk, but it shows how bullish the company is. Valuation and market position. Even at $33 a share, SMCI's market cap is only a fraction of what it would be if 2026 goes well. With 640 million shares, $33 price implies about $21 billion market cap. If the company truly hits $40 billion revenue and improved profitability by 2026, a $200 price, market cap $128 might not be crazy at all. That would imply $3.2 stock. If 40B rev with say 20% net margin equals $8 billion profit, PE 16 yields $128 billion cap, $200 PS. It's heavy math, but the gist is, the market might be heavily undervaluing the AI server growth story right now. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey His law. For His commandments are sure and His word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now.